The U.S. dairy industry is in transition, with cheese stepping into the spotlight. Major investments are pouring into processing plants across the country. So, what's behind the cheese boom, and could it tip the market off balance? I'm Johanna Bota, and to delve into all of this and more, I'm joined by StoneX's Director of Dairy Market Insight, Nate Donnay. Good to have you with us, Nate. Now, as we all know, milk is a live product with a very short shelf life, which makes transformation absolutely essential. Now, in the US, the dairy industry is undergoing some real shifts. For example, with fluid milk consumption on the decline, there's now a growing focus on processing, and we're seeing major investments in cheese production as a result. So, what is driving this investment wave?
Well, in the US, and it's similar percentages for Europe as well, about 15% of the milk is going into a bottle for use as a beverage. And that percentage has been declining over the last 5, 6 decades. About 50% of the milk goes into cheese. The remaining 35% goes into various products like butter, yogurt, ice cream, milk powders, and other specialized dairy products. And that percentage that's going into cheese has been trending higher for the past 5 or 6 decades. So really, cheese is the driver behind consumption in the northern hemisphere. In the U.S., we've had an estimated $8 billion invested in new dairy plant capacity over the past 2 years, with the majority of that going into cheese. There's new plants or expansions of existing plants that have been taking place or coming online in late 2024 and into 2025 in Texas, Kansas, New York, South Dakota, Minnesota, Wisconsin, and there's probably a few other states where there's some new expansion that I'm either missing or I'm not aware of. So really, cheese has been the driver behind demand growth in dairy, and that's why we're seeing significant and new investments in cheese processing capacity in the U.S.
Why cheese? Can you elaborate on any idea why cheese is taking over right now?
People like cheese,
Yes, we
and
do.
it's true. Um, we we find new ways to consume cheese. You look at stuffed crust pizza. You look at say big taco chains and the way that they're able to add and incorporate cheese into all kinds of products. It's just a very versatile product, and we like it, and we find new ways to consume it and add it into things that we're already eating.
So, could this create imbalances in the dairy market then? What's happening right now?
If all of these new cheese plants were to come up and run at full capacity and there's no change in production at the existing cheese plants, it would boost US cheese production by 4.5 to 6%. Typically, the demand growth in the US for cheese is around 2.5% per year. So production increasing by 4 to 6% is concerning for the market. The last time that we saw production increase by 4% or more was back in 2006, and it did push US cheese prices down to government support levels. So we do have the risk of lower prices due to these new plants, but these plants take about 2 years to build. So this increase in capacity has been a long time coming and it's been well advertised, which is making the existing cheese producers nervous about overproduction. We have cheese production data through March, and first quarter cheese production in the US, after adjusting for leap year, is only up 0.5% from last year. These new plants have been ramping up a little bit slower than expected, and the existing cheesemakers have been nervous about overproduction. So they've been holding back on cheese production, or at least not willing to overproduce in this current environment. So far, we're not overwhelmed with new cheese. And on top of that modest production growth, we've seen record high cheese exports in the first quarter, which has tightened up the market quite a bit. The expectation is those exports are going to stay good into the second and probably into the third quarter as well. And we've seen spot cheese prices rally to 8 month highs here in late May. And the futures market is anticipating further increases into June. So this has been a really good example of um, the industry thinking that we know what's going to happen with supply and demand and prices, and then the exact opposite ends up happening. And it's a good example of why we're big proponents of risk management in these dairy markets.
Well, thank you, Nate. And thank you for watching. For more financial content like this, please like and subscribe to our channel.